Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rourke with Shawn Hackett of Hackett Financial Advisors. Well, we had a higher day in all but the cattle market on Friday. And Shawn, let's talk first of all about the grains. We did see a pop there end of week after the big sell-off on Monday in reaction to those bearish USDA reports. So what's your thoughts? Do you think that it was mostly short covering activity? I know we've had some good end user buying.
We've had very good end user buying for sure. I think the market is questioning some of the supplies that came out on this report, especially the corn numbers. I think a lot of pretty good data that we have suggests they might be too high on the corn numbers. And so I think because of some of the distrust over the legitimacy of the USDA numbers, the value that was brought into the market, and some weather worries next week coming into Russia, Ukraine on the potential for some frost risk, I think that was enough of a combination with the lack of follow-through selling after Monday's report to bring the market some short covering and at least put some prices back up a little bit from where we were.
So do you think the funds continue to go short here in the corn market, or have we reached some values? You know, we held the August lows. Will those hold? And can we maybe build on that a little bit?
Yeah, I really think Monday was anticlimactic. Normally, when you have a large supply report like that, if the market truly embraces and believes it, you would typically get follow-through selling over the next couple of days. We did not see that. And the fact that we did not see that means that the market pretty much, in my opinion, in our opinion, has priced all of that large supply numbers in on the balance sheets. And I think now we're going to start chipping away from better demand, from some weather issues, acreage battles that we're going to be talking about, so maybe some quarterly grain stocks adjustments. And the market, I think, is moving beyond that supply and moving ahead and start looking at what could go wrong here with those large numbers. What is the market not considering? Have they overpriced to the downside here? We think they probably have for now.
Yeah, for sure. Now, we did have a lower weekly close. You had the March contract, which could not take out that 425 resistance area for a couple of days. So we're basically in a new trading range, and it's going to be pretty hard to get out of that, isn't it, without a catalyst?
Yes, it's going to be pretty hard to get out of it. I don't see how we would get out of it unless you were to get something going on with second crop corn weather in Brazil. And you really don't start worrying about second crop corn weather until late February into March, after the crop is near finishing up its planting. And obviously, you know, if we were to get a big weather problem that's verified next week in Russia, Ukraine with a frost, that certainly would do it. But we definitely need a weather catalyst here in order to get ourselves out of this. If we do not, I think it's going to be trading range type markets, kind of back and forth technically until we get further on into the late March reports.
Yeah. Soybeans also putting in a little bit of a new trading range, but at least we did hold the January lows, that 1038 area in the March contract. A lot of people calling that a double bottom. Do you think that's true? Are we going to be able to hold that for a while here, especially with the big Brazilian crop coming?
Well, I really think that many people thought that the China trade truce was going to run soybeans higher. It did initially, but what we've now learned is they're not going to be taking offers out buying soybeans. They're going to be buying on weakness, providing a shock absorber when the market is weak. So I do think we can make a double bottom here. I do think that China will buy plenty of soybeans on weakness, limiting our downside trajectory. I do not believe they have any interest in taking out offers on any rally with Brazilian production looking so good and with large supplies that will be ready to be hedged here starting in March. So I think what this is telling you is, you know, we have a pretty good trading range developing here that's going to be hard for soybeans to get out of anytime soon.
Well, and then you're going to have hedge pressure from South America and the Brazilian crop coming at us, especially. We're going to follow their price lower, aren't we, a little bit?
Absolutely. We're going to have to eat through that first couple of months of supply before we can start seeing something different. And yes, China has committed apparently that they're going to buy more soybeans going forward, you know, that 20 or 25 million metric ton number. But I don't think they're going to do it during the throes of the initial couple of months of supply coming from Brazil. I think they'll start doing that afterwards, especially if our weather looks a little dicey here in the spring and the early summer.
Yeah. One part of the soybean complex that did have a sharply higher close this week was the bean oil market. And a lot of that was kind of pushed by talk that we might get the RVO levels in the early part of March, and those would be favorable. We still have a lot of question marks about how the feedstocks are going to be treated. But do you think this is positive of enough news to help support the market?
Well, it's enough to support the market from going any lower. Is it enough to really rally bean oil higher? Probably not. I mean, we've had so many false flags, carrots dangling that it's going to be this, and then we find out then we get disappointed that it's not exactly what we thought. I think the market's going to be very reticent to trade too much premium in there until they actually see the whites of the eyes of an actual policy that confirms a more bullish outlook. There's been too many misfires here. And I think the market's going to be very, very cautious.
Yeah. So the wheat market, you said some short covering. We were putting in some weather premium into that market on Friday, and wheat actually held up better than corn and soybeans this week. Do you think we can build on that or not?
I think in the short run, it really comes down to what happens next week in Russia, Ukraine, and even to some extent, there's some areas of the U.S. with some of this cold weather that's coming in over the next 3 or 4 days over some snow. I mean, I think the market really needs, if we get through those two weather events and the market deems it that nothing really materially changed, I don't think that wheat market's going to hold on to any rally. I don't think it's going to, advance further. Doesn't mean we make new lows or anything, but I think in order to advance this short covering rally that we saw a little bit this week, we're going to need to see actual damage. The market has to be sufficiently concerned that we saw winter kill risk that is going to take the top off the crop. I think Russia, Ukraine, there's a legitimate chance that could happen, but obviously with frost, you have to wait until the weather actually occurs to see if it actually delivers or not. There can be final changes at the very, very end that alter it one way or the other.
But as it stands right now, those global supplies are a huge headwind, aren't they?
At the end of the day, when I look at the Russia, Ukraine, especially the Russian export sales, I mean, they are just selling very, very aggressively, well above last year's levels. And so long as they're willing and able and wanting to sell those kinds of supplies, like Brazil would be in for soybeans, it's very, very hard outside of a legitimate weather issue, that you're going to get wheat to have too much move to the upside without hedging pressure, knocking the market back down.
Gotcha. So let's talk about the cotton market, because the reports from USDA were actually a little bit bullish. And that market, though, has seemed like it's been such a laggard. What do you think could finally get this market to start seeing a bigger rally?
Well, when we've looked at crops and very low planted acres, there aren't a whole lot of examples, Michelle, where you get 2 years in a row of historically low acreage, planting acres, without getting the market to respond. Meaning that, yeah, you can have 1 year of it and you can kind of eat away supply a little bit, but you get a second year, inevitably demand surprises somewhere along the line, and you wind up realizing that you totally missed out on the acreage number from what you needed, and you get a reaction in the market. It'd be very hard for me to imagine that we can get through the duration of 2026 with what I think is going to be bare minimum planted acres in U.S. cotton, and think that we're not going to have a scare at supplies, especially if Mother Nature has anything to say that's not perfect. It seemed to me this is the year that we could get a reaction that should allow at least one good cash selling opportunity for producers that makes more sense than the low to mid 60s where we've been trading at for quite a while now.
Do you think this week's USDA reports change at all what we plant this next year?
I mean, if this price level were to persist, especially into the planting season, I think we would take some acres off from whatever the number is supposed to be. I don't think, putting a crop in the ground of corn is expensive. The inputs are expensive. And for those that haven't put in hydrous down in advance, where you pretty much are locked into planting corn acres I do think that there's going to be some switch to other crops, whether it's soybeans or not, we'd have to see. But I do think if prices stayed here in this 420, 425 or lower level, I do think we lose some acres from what we were supposed to plant all along.
And the cattle market had a substantial setback on Friday on a rumor of New World screwworm again in the United States. And it's unfortunate that we continue to see these rumors kind of tank the market at times.
We live in a world with artificial intelligence, social media, 24/7 news, and funds that can trade thousands and thousands of contracts in nanoseconds, that we are subject to the rumor mill. How many markets have moved up or down on news that we find out after the fact turn out not to be true, yet the market, at least for a little while, reacted to it. I don't, so we are stuck with that kind of trading in our markets, and that's some of the biggest short-term risk are always those headline risks that are not able to be verified but are able to be traded. And certainly we saw that happen with cattle this week with a rumor that has yet to be verified, in a reaction to the market that that was certainly severe, and it's too early to tell whether there's more to it than that or not.
You were also up into some resistance areas, though, from a technical standpoint, that would have probably led to some profit taking anyways going into a 3-day weekend, wouldn't you?
Absolutely. I mean, if you look at a chart, we made a perfect retest of the prior highs and then turned down. So like you mentioned, the soybean market looking like a double bottom maybe. Well, the cattle market, the live cattle market, the feeder cattle market looked like a perfect double top. And you would expect, the market to reach resistance and have some profit taking. If you didn't know about the rumors today, it'd be perfectly logical to suggest that some of that selling today was technically oriented from people looking at the charts. I know we always try to have a fundamental reasoning for why markets do things. Sometimes it is technical. Sometimes it's just money making moves based upon chart patterns that have a history of doing certain things at certain times.
Yeah, and it led to mostly steady cash trade in the Fed market. I think there was hopes for higher cash, so that may be a bit disappointing to this market too, don't you think?
Certainly that would be disappointing for sure. And I think the other thing that's extremely disappointing is that the beef cutout price is no better today than it was last May, despite supplies remaining extremely tight, and we're well off the high in beef cutout prices. So, there's something that's changed here on the demand side that's not allowing these beef cutout prices to surge any longer.
Thanks so much. That is Shawn Hackett with Hackett Financial Advisors and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.